What's up, everybody? Welcome back to Trading Wars. Thanks for joining me for part 2 on how to trade SPY for a living. So today we're going to be focusing on strictly trading strategies. I know this is probably the most exciting part for a lot of people. So I'm going to be showing you guys what I do on a weekly basis, and let's step right into the war zone. So do I have anybody from the Trading Wars Army in the chat? Hit me with the Trading Wars Army right now if you're in the chat. Hit me with a 1 if you're feeling good, and let's get started, guys. Let's have a good time. Share the education. You know, education is a human right, and that is very true. Without education, we cannot progress. You know, and for me, education has been the thing that's really taken my life out of the gutters. All right, so let's get ready. All right, so first, we need to separate trading strategies into 2 broad categories. The first one is automated trades. The second one is live trades. So automated trades, what that means is you can go ahead and put those into the broker the night before. So you don't have to really wait for any setup to happen in front of you because the setup has already occurred, right? So automated trades are basically what I do are swing trades and trigger trades. And essentially what they are is after the day is closed, the charts are closed, I can go ahead and put a trade into the broker, have it fully automated with a bracket, target, stop, and entry. If I'm doing options, I will do a conditional market order to fill me based on a trigger price. The second part of automated trades are trigger trades. Now, trigger trades are essentially the same thing as swing trades, but they're more for day trading, right? So every single day, I have a trigger trade, which is a day trade. And when the swing trades come up on the chart, that's when I take them. So the swing trades are derived from the daily, weekly, and monthly charts, and they can be any of the Trading Wars pattern preconditions. So you guys know the patterns that I focus on: inside, outside, holy grail, nirvana, double inside. So those are the 5 patterns that I really focus on because I know that they give me an edge. Okay. And the trigger trades on the other end are Fibonacci based trades that are, I look for traps. So they don't have to always be Fibonacci. They can also be specific price action patterns. I factor in the average true range. They're seasonal because as the market shrinks and expands in terms of volatility, so must the triggers also shrink and expand so that you have a chance in order to get to your targets. So it's a set and forget type of system where you kind of put the orders in, let it do its thing. Works with shares, futures, options as well. So what I'm going to do is I'm going to go ahead and look at some specific examples to give you guys some guidance. And I had a lot of people sign up for the spy room. So I also want to pretend like this video is for just general help for new people in my room so that they can understand what they got to do on a daily, weekly basis. All right. So hit me with a 1 if you're following me so far. Hit me with the Trading Wars Army if you are happy, I guess, for this webinar. I'm really excited for it, and I really want to take my time. So we're gonna go very slow today, and that I think that this is going to be one of the videos that you can always come back to and watch over and over again. All right. So we start off with the swing trades. So the swing trades, if we go here to the Discord, the swing trades have their own channel, Spy Swing Trades. Okay. So these are posted once we get a setup on the daily, 2-day, 3-day, 4-day, weekly, monthly. When we get a setup on any of those time frames, I will post the setup here. There's always going to be a long entry and a short entry. There's always going to be both sides, okay? Because what we're trying to do with this is we are trying to go ahead and take the break of that specific pattern. So what I'm going to do here is I'm going to zoom in and I'm going to focus on this outside bar because this was the last bar that I did a recap for on Twitter. So I actually have the recap right here. So I'm going to walk you guys through this. So I took the SPY 466 puts from 399 to 1342 for 236%. I have the broker statements in this video. Let me just link it in here in case anybody missed this one. Okay. But I can walk you guys through this again. This was the last one I did a recap on. This one I closed it recently. Okay. So let's look at this. So If we go back to the chart here, we're going to start off with this outside bar. So the way that I took this trade here, guys, is generally when I take swing trades, I kind of like to do them lotto. For me personally, I like to do them as a lotto play, meaning it's either going to go to zero or I'm going to win big most of the time, right? So I like doing that because I'm also day trading. So when I have a swing trade, it's almost like a hedge, because if the market does gap down, like you can see here, when I took this trade, we broke to the downside first. Okay. Once we broke to the downside, you could see there were 2 days where we went sideways and I was down on this position. But then you see the following week after, we gapped down and we rolled over. And if I did not allow this trade enough time to work, then I wouldn't have made money. I wouldn't have been able to triple my money on this trade. What I like to do also with these swings is I like to take them 2 weeks out, generally from when I get in 2 Fridays out. Okay. So in this particular case here, guys, let me just walk you guys through this. Hit the replay. So this is the 22nd of November. Let me hit the replay here. Okay. Let's go to the Discord and pull this up. So November 22nd is here. I believe it's this one right here. So the short entry was 467.97. We're going to talk a little bit about hedging a little bit later on, because it's very important. All right. So this line right here was our trigger. Okay. And what we can do here is we're just going to go ahead to the hourly chart here, and then we can just hit this replay together and watch this trade. All right. So this is the trigger right here. And let me just hit the forward. Boom. So right on the open on November 23rd, we were filled. So I got filled within the first 3 minutes of the open, and I got that fill for $3.99. So $399. I only bought one contract. And on the Friday close, these were trading for $13.42, which is $1,342. And we could just watch this play out. Like you see, we do have some heat, right? We did take a little bit of heat, and then we gapped down. See that? We gapped down, and then from there, let me fast forward. You can see from here, after that gap down, we had a little bit more of a pullback, and then we traded all the way down there. And while I'm here, just want to point something out. If we really look at this, guys, there are a lot of Fibonacci's on this chart, right? And I just want to show you guys. Let me take it from high to low here. So here's a little fib right here. Okay. If I take the bigger picture right here, little fib there. If I take one from here to here, little fib here. See 786 inside bar, beautiful drop. So you can always add to those swing trades using these fibs. So for example, if we are short from this line right here, when we get these pullbacks like these guys, once we get these pullbacks, we can add to the put position. And let me show you something very important. So you notice we have these signals, right? We have an outside bar over here. We have an inside bar over here. We have a Nirvana pattern over here. So these are ways that you can add to your swing position. So we're in the puts here. We pull back, outside bar can add more to the puts on the outside bar. We pull down, inside bar can add more to the inside bar. You see that? So that's like how you take a winning trade and add to the position by risking your paper profits. But if it continues the right direction, you can make a lot of money. Okay. So that was an example right there. Back to the daily chart. So we could see this outside bar was a signal. We gave it in the Discord. We filled to the downside, and I personally took it all the way to expiry, but you definitely don't have to. But that's, I like to treat them more for hedges, but they're definitely you could just swing trade all year round, right? And just be profitable doing that, right? Like if you can't day trade and you just want to go ahead and swing trade, right? When you get the signals on the chart, you can go ahead and take some of those trades, and you can, whatever you put in the option contracts, for example, you can risk that as your full stop loss, or you can go ahead and take some futures contracts if you want. So let me ask you guys, does anybody want to look at a futures contract example of this? Hit me with a 1. So does anybody want to look at a futures contract example? So I have the futures chart open here. If you guys want to look at it, we can. But essentially here, check this out. So the market just opened at 6 o'clock. You could see we had a little bit of an opening range breakout right here, and we popped. Nice little push up. If you guys, you guys that have my Fibonacci book that know how to draw the fib, this was an easy one right here, guys. I mean, let's just take 1 second to respect this and show some love to the Fibonacci. Do you see how precise this is? We touch the 786 and we are gone, guys. We touch a 786, check this out, and we are gone. Look, 21 points. That's the power of the fibs. All right, beautiful. So let's go to the daily. And when you guys see those things, man, once you see the fibs, you can't unsee them. You know what I mean? So here we go. Here is the outside bar, the same one from SPY. Okay. So if you want to trade the futures contracts, right, you can do the same thing. So we come in here. I always like to use this tool, this short position tool. So let's say I take the trigger here, put the stop loss above the candle, right? This is as an example, we pull it down. Okay. So this is, let's see how much points this is. We can take this down there. So this is well over 150, so 180 points. Okay, so your risk here, you're risking about 60 points, 180 point downside. And like I showed you, you could have added on all those on the way down, like I was showing you. So if you're doing one micro contract, let's say you did 180 points. Let me pull up the calculator. So every point is worth $5. So that's $900. Okay, so that's with one micro contract. And generally to trade that one micro contract, you'll probably need about $1,000 of capital in your account. All right, so there we go. So that is an example of a swing trade right there. The swing trades are in the SPY swing trade section. Okay, hit me with the 3 if you guys are good there. And then let's look at some trigger trade examples. Okay, so hit me with the 3. So, we need to spend a little bit of time talking about automation, because automation is important, because what it does is it allows you not to have to look at the chart throughout the day. So technically you can put your trades in automated overnight and have a stop loss protection, etc., and then go do a full-time job, or go do something else, like go do another business, go cut your hair, go cut the grass. You know what I mean? So there is a lot of benefits to automation, because of the fact that it will allow you to free up time. And as the market and as this world continues to change, just remember, trading initially was like done through paper, right? They used to put orders on a piece of paper. Okay. So now look where we are. So another 10 or 20 years, guys, I don't think people will be staring at charts. I really don't. And I'm trying to lead the next generation of traders through automation. And I think it's just a better use of your time. Really is. Because as long as you have the stop losses in place, or if you're doing option contracts, as long as you're willing to lose the full premium, then you can free up your time to make more money doing something else. And that's very, very important. Okay. So that's an underrated benefit of automation. I just wanted to point it out. Obviously, there's an flip side, right? There could also be you miss potential trading opportunities that come up to you live. That's for sure. And then there's sometimes where you have brokers that are not good, right? That they can give you slippage. They can not honor your stop loss, blah, blah, blah. So you got to make sure you have a good broker to support those type of trades. All right. So now let's look at live trades. So live trades, one that I forgot to put here is also the orb. So let me just put that here, 2A orb. So live trades require you to be at the screen because you have to see the pattern, right? So thankfully I have my indicators, which are free, right? I have a free version and a paid version of my indicators, which highlight the patterns for me in a different color. So that helps me to be able to spot the patterns, right? But fractal trades are any of the trading wars patterns. We've been through this many times, right? There's the inside, outside, holy grail, nirvana, and double inside bars. And essentially what we do with the fractal trades is we take the break of the bar and we stack it with Fibonacci. right? That's the way that I like to trade the fractals. Then we have Fibonacci trades, which are the morning and afternoon legs. I wrote about this extensively in my Fibonacci book. And then we have the opening range breakouts, which I like to focus on the 3, the 5, and the 15-minute chart. So those 3 are the time frames that I choose. So these obviously involve a lot more attention. You have to be at the chart, you have to identify the pattern, etc. Okay, so actually, before I forget, so the trigger trades, like I said, let me just show an example of that before we move on, and then let me also just show you where they are in the Discord. So the trigger trades are posted here in the SPY trigger day trades. They're posted every night after the close with long and short entries and targets. So let me give you an example of that. So this is an example right here, guys, of a trigger. Okay, so our entry for the trigger was right around 462.93. So in this case, we pulled back into the trigger. This was Monday. We got filled. Our stop loss was down here around 460.96. So we did take some heat on this trade, but we did not get stopped out. And then we just blew through and then hit the targets on the way up. So it's only one trade per day that I like to do the triggers with. And this was an example of Monday. I'm going to come back to this and talk a little bit more about that after. But let's get back to what I was saying here. Yes. So I think Friday would be a great example to show you guys about this. So let's go to Friday. So this was Friday's price action. So an opening range breakout is basically the break of the first bar within that time frame. Okay. So if we have a 3-minute, or opening range breakout, it's the break of the first 3-minute bar. In this case, I'm showing you the 5-minute chart. So the opening range breakout is the break of the first 5-minute bar. So let's hit the market replay. Okay. So this is the first 5-minute bar on the Friday. And what we have to do here is if it breaks the low, we're going to trigger puts. And if it breaks the high, we're going to trigger long. And then boom, we trigger puts. And as you guys can see, that was a huge, huge winner. So those are the orbs. The orbs, I do not trade them every single day. So specifically here in the setup alerts room, guys, in the morning, I'm live for about 1 to 2 hours every day, calling out the plays that I'm looking at, that I'm interested in, that I like to take. And every morning, guys, I let everyone know if it's going to be an orb day or not. And it comes from me just looking at the chart and seeing if I see trap traders. So right here, you could see this is an example. So this was on the 2nd, right? So hugging yesterday's low, going to take the orb today, 3, 5, 15 minutes, small size, trigger is right above us, etc. And then here we go. Here's the inside bar, money, blah, blah. So I give live commentary there for members, but the orbs, I only use them based on when I know that there's a potential for somebody to be trapped, basically. Okay. So 3, 5, and 15. The Fibonacci trades, the morning and afternoon legs, is a whole topic on itself. You know, I wrote a whole book about that, and I have a free playlist on YouTube, so you can check that out. And then the fractal trades, a great example would be again on Friday. So here we go. So my indicators, guys, the Nirvana indicator and my golden indicators here, they highlight the patterns for me, so I don't have to I don't have to look at the low of the candle. Oh, the low of this candle is this. Oh, it's an outside bar. No, that's just too hard to trade with, right? So whenever I get a blue highlight, then this becomes the Nirvana. Whenever I get a yellow highlight, that is the Holy Grail. A white bar is an outside bar and a yellow bar is an inside bar. So here's a great example on Friday. You could see we had the Nirvana, which broke down here, which was great money for puts, as well as this Holy Grail, which broke down as well, which was great money for puts as well. So normally with these patterns, guys, what I'm doing is I'm taking the break of the bar and I stack it with Fibonacci very simply. Okay, so for example, here's a Nirvana, right? And here's a Holy Grail. So let's look at this Holy Grail and we can replay this one together. So with the Holy Grail, what I do here is we have an outside followed by an inside bar. And once this inside bar breaks either to the high or to the low, that determines which direction I'm going to play. So let me go ahead and stack a Fibonacci on this. Okay, so here comes the first bar. Boom. All right. So what I like to do here is short on the low. Okay. And the stop, depending on how aggressive you want to be, you can put your stop based on these fibs. So obviously the less riskiest one is all the way at the high of the bar, but that will, cause your risk to reward to be, not as great. And when I'm really, really aggressive, I'm going to come in here on the 50% retracement, right? That's when I'm very, very aggressive. And we can see here, if we just go through, right, and just take this push down here as an example. So this right here, guys, is about 5 times your money, right? So if you're loading up with futures contracts here, or you're loading up with shares, let's say you take $1,000 risk, that could be a $5,000 gain as an example. All right. So those are the fractal trades. Can be any one of my patterns. What's the difference between standard indicators, premium? My premium indicators come with alerts, so you can set them on your phone. You can set them to your email. So anytime a pattern shows up, you'll get a notification. And the Nirvana indicator is exclusively for people that purchased a copy of my book right here, the drill down method. Okay, so that one, it's these indicators, guys, are lifetime. You don't have to pay any fees or anything like that. Once you get it, you add it to your chart and you have it. So that's the difference. All right, so we went through automated versus live trades. We talked about the orbs. I'm gonna show you some more examples as we continue. But just hit me with a 4 right now if you're following me. Hit me with the 4 for the 4 horsemen right now if you're following me, and hit me with the Trading Wars Army if you're here to support me. I appreciate you guys. And let me just talk about how the Discord works. So the trigger day trades are self-explanatory. They're posted every night. The swing trades are self-explanatory. They're posted every night. And the setups alerts, guys, is where I'm live in the morning and I'm calling out the plays. And I also have a bot. I have a bot that is in this channel. And what it does is I designed this bot to call out every 5 and 15 minutes setup. So you can see later on in the day when I'm not giving commentary, the bot will just take over and give all the setups. So these are all valid setups. Anyone can play these setups. Obviously, make sure you're managing your risk, etc. Let's just look at the bot on Friday as an example, right? So here's the bot for Friday. Let's take a look at this. Boom. Let me shout out my brother, Chris Cox. Welcome to the Trading Wars Army, brother. Appreciate the support. Rich, is it possible to add your indicators on Trendspider? I did ask Trendspider to add my indicators, but unfortunately they don't want to. I don't know why. I don't know what the reason is, but I guess I'm not popular enough. So hopefully one day I'll be on that list, because I do think these indicators, like, I'm giving it for free. I'm not trying to, like, the basic indicators that I give for free are good enough. You don't need anything else, right? But maybe that's the reason. Maybe it's because it's free. Like, maybe that's why nobody wants to put it on their charts. You know what I mean? If I was charging money for it, then maybe everybody would want it on their chart. You see what I'm saying? That's how it is sometimes in this world. If you can't make money out of it, then people are not interested at all, you know, unfortunately. But anyways, let's go back here. So this is the bot doing its thing, right? So if you look at the last 15 minutes, so if you look at the 15-minute chart on Friday, let me just fast forward here. You can see, right? We have some inside bars over here. We have a holy grail. And then if we go to the 5, we also have this one. So we actually were live on stream the other day, and I called this short out when we were live, and this one went down for a nice push. And then right when I closed the stream, this inside bar came. So I wish that I kept the stream live so we could have went through this one, because we would have taken this trade together, and this one was a beautiful push into the close. And you can see that the bot is always there giving these call outs, so you never miss them. So right now I'm very happy with where I am with the room. I think we have a lot of different trading strategies that are stacked on top of each other. And that takes me to the next part of the discussion. So the next part of the discussion is what I want to talk about is the sweet spot of trading as well as hedging. Okay. So what I mean by the sweet spot of trading is that each one of these systems, guys, will have win streaks and lose streaks. Okay. So winning streaks and losing streaks, and essentially they're almost in a way hedging themselves. So for example, this happens to us a few times a week in the room. We might get triggered on the orb for puts, right? But then the trigger for the long will come in. So we can be in a long and a short at the same time. And the long might fail. So let me actually give you an example. So here we go. So this was Friday. So So right here, guys, here is the Friday chart. So when we got triggered on the orb short, but we also got filled on the trigger long. The trigger long got stopped out for a fixed amount, right? And then the puts paid, right? So that's an example of hedging yourself, right? And that's what I really like about having multiple systems, because every single one of them is going to have major winning streaks and major losing streaks, and because it's just mathematically based, right? The market changes cycles, the market changes personality, and some trading strategies that were not working last few months will start working again. So for example, like the opening range breakout, these last 2 months have been extremely powerful. It's not always that powerful, right? Sometimes it's a lagger, but that's the benefit, because then you have the other systems that are covering you. And then sometimes, for example, like the swing trades, everything is making money from swing trades overnight. Like everything is happening overnight and nothing is happening during the day, right? That is another example of hedging yourself. And in terms of risk management, right? With the 2-to-1 risk to reward, you only need to win 34 out of 100 trades. And that's very important to me, because we don't need to be perfect, right? Let's say we're risking $500 a trade. Our average loser is 500. Our average winner is $1,000. We only need to win 34 out of 100 trades to walk away with a profit. And that's what makes trading possible. It's math. If this probability was not in our favor, we could not actually make money in the stock market. And when you think about it, guys, I know some of you guys, including myself, we like to gamble. We go to casino. We have a good time. You know, some of you guys play the lottery, et cetera, et cetera. I'll tell you something straight up. Your odds are not even close to 34 out of 100, like having that success rate, right? Your percentage to win is probably less than a percentage, right? So that's a really eye-opening thing. Okay. So so there we go, guys. So I've covered pretty much what are the majority of what I wanted to cover. Like the next thing that I have to do is go through the SPY recap and show you guys step by step every day how it played out, etc. But before we go into that part of the seminar, why don't let me know. I'm gonna answer some of your questions, but just hit me with a 5 real quick if you're following me so far, if you understand the concept of hedging and risk management. So it is possible to be in calls and puts at the same time. It is, especially when you're trading 0 days to expiry. Let's say you risk $500 per trade. So you take $500 on a call, you take 500 on a put, and one of them goes to 0. The other one might be a big home run, right? So but you need to have it based on a system. It can't just be based on, oh, I feel like it's gonna go up, right? Like that's not a trading system, All right. So let's go ahead and let's go into last week's trading action. And I'll walk you through the Discord, how it went and all that. This is for new members. I know you guys have a lot of questions, so I'm going to go ahead and do that. And also for you guys, it's just for an educational experience. Okay. And here's the great news. I have not coughed one time in this seminar. One time I have not coughed. So for those of you who follow me every single day, I've been battling this crazy cough, and I have beaten it, I think. Maybe I shouldn't speak too soon. All right, let me take some questions. What is the outlook for Monday? More bloodbath? I have no idea. When Monday opens at 9:30, I'll be able to gauge the market. I trade the market based on the bars. I take a bar by bar approach. I do not speculate on anything. If I buy the book, can I postpone the Discord for a week or so? Yes, sir. Yes, I have people that bought the book and postponed it for months until they're comfortable. You could definitely do that. What else do we have? Yeah, so there is a pretty interesting pattern on the SPY daily chart. I talked about this on my last stream that I did, but pretty much right here, guys, this pattern, the last time this pattern set up, I think was over a year ago. This is an outside, inside, outside, extremely rare pattern. What it means, guys, it's nothing fancy. What it means is there's a lot of trap traders, lots of trap traders. There's bulls that are here, there are bears that are here. And usually after these type of patterns, we have a resolution. One thing that I did point out is we were sitting on the 50% retracement right here. And anytime we're sitting on these bigger picture retracements, the algorithms do not give these up without a fight. But if they do give it up, sometimes we can have major, major flushes. What else do we have? When you have the inside bar, did you set the fibs on that bar or the previous? On the bar itself. Full form for the ORB is the opening range breakout. Thank you. Have you tried SPXL, SPXS pair for automated? No, I have not, brother. How come your triggers are slightly lower or higher than the actual IB low? It's like I said, if you read this right here, they're based on Fibonacci and they factor in the average true range. They're seasonal, so they change depending on the range of the market. So I change it up based on my back testing, based on my data. Generally, if you can front run, you can make more money, but there's a special way to do it. And that's something that I've been working on actually this past year that's helped my trading a lot. All right, let's go back into the recap now and let's discuss. Okay, so here we go. So let's hit the replay. So I'm going to work backwards. I'm going to start with Friday and we're going to discuss. So here is Thursday's high and low. So I'm going to go in here. I'm not going to do this for every single one because we're going to be here forever. But like I said here, I like this open at yesterday's high. Going to try the orb 3515. So let me just talk to you what I see when the chart opens. So here's the first. Oop, that's not even the first candle. Here's the first candle. So anytime, guys, we press up against the previous day's high or low, I love to take an opening range breakout. Even if we also when we gap up or down, I like to take the orb as long as I know there's a potential for trap traders. So what was going through my mind at this time was we had a great push, right? Anybody that bought back on the 1st of December, they bought on the open, right? Now they're going to also be wanting to cash some money in. So we had whenever we have big extended runs like this and a gap, the orb is always a good shot because it could go either way. We could squeeze and push higher if the shorts are not willing to try here. But if the shorts do try and we have profit taking on top of that, then we can get big drops. And that's kind of what happened on Friday, right? So if we go here, the first one I took was a 3-minute. Okay, so you could see here, guys, the 3-minute right here, it broke the low. So we're triggered in short here. Let me see if I can walk you through there. So right here, you could see. So SPY VIP at 936, we were short. And then this is the chart right here. We started to hit targets. We started to push even more. And what I was eyeing the whole time on this gap down here, this push down, sorry, was this gap fill. I didn't think we would get more, but the majority of my position is gone at this gap fill just to be safe, right? So we fill the gap. Right there is where I'm pretty much out for the majority. I always leave a runner on just to have the chance to win big, you know, and to deal with FOMO, right? We also had this inside bar, which was a great setup there. And that one also was a big winner. And then you can see from here, generally after like the first 20, 30 minutes, I switch back to the 5. So the 5-minute also had a beautiful opening range breakout to the downside. And we can go to the 15 and you're going to see the same thing. All 3 time frames that I look at, all winners, very, very clean. Now we go to the 5. What we see here is we got the Nirvana with a beautiful breakdown. And then right after Nirvana, we had the Holy Grail, which set up right there. And that was a beautiful winner. We also had the trigger, which was triggered right around here. And that one was a loser. So there was, obviously, there's going to be some losers. The trigger long was a loser. And then the trigger for the short side, I was on stream talking about it. So we were able to get the trigger to the short side to break even. We had a little push down here, didn't hit the target. And then when it started coming back up, took the trigger out for break even. And then moved on from there. All right. So hit me with a 4 if you followed me right there. Hit me with the orb if you followed me on that. So Friday was all about the opening range breakout. Um, I'm gonna ask Derry here, my little brother here, who's also trading. What can you take? Can you take a look at what did the 3 minute opening range breakout for the puts? What did they go for? So take a look and then just share it with us while I'm going through this. Let us know. So while Derry is looking up that 3 minute orb, what it paid, let's go to the next day. Okay. So the next day was the 2nd of December, which was a Thursday, right? So right off the bat here, guys, with this one was kind of very similar. So let me go ahead and draw the high, which was up here, and then the low, which was down here. So the triggers for December have gotten off to a little bit of a slow start. You'll see that the trigger actually was filled right away, and this was a stop out for the trigger right off the bat. Okay, but the same thing, guys, because we were testing this low, I was looking for the opening range breakout, and we're able to catch the opening range breakout on the 3, the 5, which was right here, and then the 15 as well. So all three of those paid pretty well, which is right here. So the 15 actually was this big inside bar here, which also did well. So orb was great. Trigger was a loser. And then after that, guys, we had some other great setups here. We had this fractal outside bar, right? The second candle of the day, just taking the break above that. That was a great winner. We had this fractal outside bar, which took us back down. This one took us down. This one was the loser. And then this one was very important because this was a Fibonacci. So if I take the Fibonacci from the low to the high, this is the concept I call the morning leg. So this is something that I called out on the stream, on the Discord. Let me just show you guys right here. So this is me drawing the Fibonacci live so everyone could see fibs in play, the morning leg. And then we came back here, we tagged the 618, and then we put in this outside bar. So that was the last beautiful play. Take that break of the outside bar, take you into the end of the day. Very, very clean. Okay. So the 458 puts, so this was Friday, the 0 days to expiry. Once we triggered in on the 3 minute chart here, they went from $1.45 to a low of $7.50. So 417% gain at the best case scenario, right? So very, very clean. I mean, if you catch one of these guys once a week, it's pretty good week. Pretty good. All right. So that was Thursday. Now let's look at Wednesday. So Wednesday, we opened, you can see we're opening in the middle of this range. And I didn't see anything that wanted me to take an orb. So I did not take the orb at all. Instead, what I did here, guys, was I went over to the 3 minute chart. So let's focus on the 3 minute chart for a second here. Okay, where are you? Right here. So this was a 3 minute chart right here, guys. So like I said, we're opening in the middle. I'm not looking for an orb. And you can see when we did break the first 3 minute bar, we immediately reversed. So the great plays that we had here, guys, was this inside bar, which was a beauty. This one, a little bit of a winner. But the best play here, guys, I'm going to show you on the 5 minute chart. But before we get there, let me show you this, this Fibonacci leg. This is the morning leg, okay? And I'm going to leave this Fibonacci on because it's going to become very important, okay? And for those of you who are asking, the Fibonacci is my first book that I wrote, The Golden Partnership, Fibonacci and Automated Options Trading. It's right here, guys, all right? So if you get the book, you get everything. You get the indicators and 1 month free in the room. But let me go ahead and draw this fib. It's very, very important here. So there's the low, and there is the high. Okay, so what you can see here, guys, is we came to the 618, right? And you can clearly see it. Like when you go to the lower time frames, you can see it a lot better. There's a big algorithm that stepped in here, right? So you can see right on the 618, boom, that algorithm came in, just pushed that up, bam, right? Then we traded all the way to the 50% extension. Now, if we go to the 5 minute chart, guys, this is where the magic really happened, because on the 5 minute chart, guys, we get a beautiful setup called the Nirvana pattern, right? So the Nirvana pattern is a specific pattern that I have for my book holders, right? So let me just fix this fib, right? And you can see right there, when we got to the 50% extension right here, guys, we put in the Nirvana. Inside, outside, the blue highlights come, the water is open, and Poseidon's trident comes down. And then we have that right here, guys. This was a very beautiful play because these 0 day to expiry puts right up here, guys, these went for 1000% by the close. And that's what I mean about taking your setups and knowing how to play 0 days to expiry. I talked about that in another video not too long ago. But beautiful, guys, just simple patterns. We don't need to really complicate anything, guys. When we take these simple patterns and stack it with the Fibonacci, we have a powerful trading strategy. Very powerful. And that one was the highlight of the week. Beautiful, beautiful Nirvana breakdown, 1000% on the Wednesday expiry. Very beautiful, guys. All right. So these two, I'm not going to take too much longer. Here was Tuesday. We had the opening range breakouts, which did fail right off the bat. The trigger also failed. We got poked out before it reversed, but we had some beautiful fractals here that were from nice scalps. And this holy grail right here was the beautiful, beautiful fractal that took us down. So a little bit difficult day on Tuesday, but nothing too bad. And then on Monday, we had this gap up, right? And we were pressing up against the previous day's high. So the 3, the 5, and the 50-minute opening range breakout all win. These fractals, this one, pretty good scalp. This one on the way back up was a loser, and this one was a great scalp as well. And the trigger on this day was the only winner for the week for the triggers. We got filled right here, like I was talking about earlier, and then we pushed up. Okay, so pretty good. One thing that I wanted to show you is almost every day you will find a valid Fibonacci leg. And that's why I try to teach people a lot about the fib. If you look here on Monday, so this little push down here is what we call the morning leg. Now we take a Fibonacci and we stack it right here, guys. So we take the Fibonacci right here. So high to low, we pull back to the 50%, okay? And we have an inside bar. Very powerful inside bar that takes us down, guys. And the fibs are not just good for trend continuation, but they're also good for reversal. Because you can see when we get here to the 272, that is where the market reverses, and then we have an extreme push higher. Beautiful. Okay. All right. All right. So there we go, guys. So that was the recap for the week. It was a great week. Tuesday was a little bit tricky, but it was a great week. Outside of that, the swings that we had from last week got paid, and we're just going to keep going from there. All right. So hit me with the 4. If you're following me right now, hit me with a Trading Wars Army for my Army members. You guys in here? I don't see you guys in here. And what we're going to do, because we got to pick 2 winners for the giveaways. And we got to talk about part 3. So I don't want to put this video over. We're about 45 minutes, so I don't want to make it too long because most people will not watch it if it's too long. But anyways, thank you for all my Trading Wars Army members in here. I really appreciate the support, man. What I'm doing right now, I'll tell you this today, I'll tell you this tomorrow, and I'll tell you it every single day. What I'm doing right now, guys, showing you my trading systems that I put 7 years to develop, having these free seminars. This is something that somebody I don't even have to tell you who. Somebody will charge you $5,000 for this and call it some masterclass bullshit. And they won't even show you the charts from like how I show you every single week. They're going to show you something from 5 years ago and say, yes, blah, blah, blah. This is what we did 5 years ago, blah, blah, blah. All right. So this is what I need from you. Okay. Because I'm putting myself out there, I need your help. Okay. So last time we hit 500 likes and 100 comments. This time I want to double that. I don't know if we can do it. I don't know if we can, but I'm going to ask you guys kindly. If we can get 1,000 likes and 200 comments on this video, I'm going to double the giveaways for part 3. Okay? I'm going to double the giveaways for part 3 if we can get 1,000 likes. It'll be my first ever 1,000 likes and 200 comments. I'm just going to throw it out there. I want to see the power of me giving things out there for free and helping people. I need you guys to help me. Okay. So let's try that. So for the giveaways, so one person who commented on the video from last week will get my book and a free month in the spy room. And I'm going to pick somebody from Twitter. And I'm going to announce that once I close this video. I'm going to go through and pick 2 people. And otherwise than that, guys, the last thing is this. I'm going to ask you guys right here. So for your comment, right, this is what I want your comment to be about. You can comment anything. You comment anything, what you liked, what you didn't like. You can comment whatever you want. But I want to ask you a question. If I can get you that, if I can write the SPY book, the SPY book is going to be accumulation of all of these seminars plus more. Okay. If I can write the SPY book by January 1st, would you be interested in that? Okay. So first of all, hit me with the 1 or Trading Wars Army if you will be interested in getting the book. But if I can get it out by January 1st. So for the new year, I hit the ground running, SPY book. And the book will have, obviously, it'll have 1 month for free in the SPY, because there's no point in giving you education if you can't be a part of the room. Then it's just a waste of time, right? All right. So thank you very much for that. So what I'm going to do here, I'm going to end the broadcast now. And please comment whatever you want to comment. And if you don't know what to comment, just comment you want the SPY book or whatever. But let's try our very best. 1,000 likes, 200 comments. Let's see if we can make it happen, guys. Let's see if we can do it. All right. So thank you so much for your time. I appreciate your attention. I appreciate you giving me some of your Sunday. And I really hope that this information will help you in some shape or form. I really hope so. Okay. So thank you again, guys. And I'm just so happy to have you guys here. All right. Thank you very much. Have a great night. And look out for the winners that will be announced right after the stream. Okay. Thank you very much. Take care.